During the times when the world economies are shut down, when inflation is going through the roof, people are losing their jobs, when the pandemic is going around the globe, when trillions of dollars are actually printed in the entire world in just 1 year. And also get this, that 40% of all the US dollars in existence, 40%, were printed in the last 12 months. It's almost half of all the US dollars that have ever been printed. This is crazy. What are you supposed to be doing as an investor? And now literally every single person awaits a crazy market crash, a crazy recession, for a crazy inflation that's coming to his doorsteps, and people are scared what to do. But for us investors, the only thing that matters is actually how to make money, how to secure our future, how to make sure we stay afloat regardless of any circumstances. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe. I hope you're ready for a crazy video today. We're going to be talking about inflation and what's happening in the stock market and how to invest, how to make money, how to stay afloat, and how to secure your future. And what actually you're supposed to be doing, or I'm supposed to be doing, or any other investor should be doing in this situation. The first thing to begin with is let's determine what the inflation is. Because all the news are inflation is this rate, inflation is 2%, 5%, 10%. We're scared, people are scared inflation is going to go through the roof and all that. But what does it mean? To make it super simple, the inflation is basically when the prices are rising and people can buy less with the same amount of money, which basically increases the cost of living in the country or in the area where inflation is rising. In other words, the money actually stays the same, but you can buy less with it. There are also some cool inflation calculators out there where you can determine what your money worth like 2 years ago, 20 years ago, maybe 100 years ago, and what the inflation actually did with it. For example, $100 in 1920 would allow you to buy a new iPhone today. The inflation since 1920 till this year is around 1200%. This is crazy number, and it means that your money become less valuable. Although it is important to keep in mind that inflation is actually not a bad thing. Sometimes it depends what the rate of the inflation. For example, an annual inflation of 2% is actually considered a good thing. It means that the economy is growing and the prices are rising, but people are not actually afraid to spend a little more money on things they were buying last year. And that is exactly why the modern countries, the developed countries, actually try to keep their inflation at around 2%. If you look at these two graphs, you can see that inflation for US and Canada for the last 10 years was actually at 2%. It means it was good and the economy was growing and people were happy, people could buy things, people were not afraid to buy things, right? Nobody actually cares what to do in this situation because wherever you invest your money, that thing is gonna grow and you're good. And what do you do when inflation goes to 5 or 7%? Well, the worst thing you can do actually is to keep your money in cash, put it on the pillow or under the mattress, or even hold it in your bank account where the best interest rates you can find out there is gonna be like 0.5% or maybe 1%. So your money is gonna start losing value eventually. And this is the worst thing you can do with your money if you want to guard yourself against inflation. And the other things that left out there is that investing into real estate, commodities, cryptocurrencies, or stocks. Let's take a look at those. So real estate market, it's a very hard market to enter because you need to have a large investment first to buy a property, to invest into a property, and to keep it, to maintain it, and maybe to rent it out or sell it afterwards. So it's maybe not something you're actually considering. And the next thing is commodities such as silver, gold, oil, gas, and all that. And this might also not be the best option because its prices are actually driven by supply and demand. And when the economy is at full, then the commodity prices are also not rising. And when the economy is at full, then the demand on commodities also falls. As you can see from these two charts, neither gold nor silver has gone up in prices in the last 10 years. That's why we're moving on to the next one, which is going to be cryptocurrencies. So this is a very speculative investment opportunity where you probably want to hold something in there, like maybe 1% or 2% of your entire portfolio, because who knows, maybe that thing is going to skyrocket. But it's very volatile, it fluctuates like crazy, so it's not a safe investment if you're considering it for your retirement, for example. Maybe it's gonna be in the future, but not right now. So the last resort we have here is our favorite stocks and ETFs. And if that works for you, just keep investing, hold your positions, don't let your emotions go through the roof. Also, take a look what the biggest investors are doing out there, what Warren Buffett is doing, or you can follow one of my videos where I explain how ETF works and what you can do to minimize your risks and make sure your portfolio is going to be growing forward and your investment is going to be on top of the game when you need them the most. And if you're super tired of all the advices out there and you want to simplify your portfolio, you want to be super easy on investments and super safe at the same time, consider investing into S&P 500 index like VFV on the Toronto Exchange or VOO on US stock market. Because S&P 500 is the very broad index, it brought up 100% returns in the last 5 years. And it's been growing on average by 10-11% since the beginning, since the birth of this index, basically since 1920. Historically, if you invested into S&P 500 and hold for long term, you would never lose your money. You would be on top of the inflation, you would grow your money, and you would secure your investments for long term. In my opinion, this is actually the best way to simplify your investments. You're going to be on top of the game, you're going to do better than other investors who tries to predict the market, who tries to time the market and all that. The only thing you need to do is consistent contributions and stay in the market for as long as possible. Because as I'm always saying, time on the market always beats time in the market. With all that, thank you for watching. I'll see you around. Hope I see you in the next video. Stay focused, subscribe, like this video. All the best out there. Cheers, bye.